What's up, guys? So let's go ahead and start the Tesla analysis. I know that Tesla has been moving this, it's been moving since the beginning of the month. Actually, since the beginning of last month. We're already almost in the middle of June, but it's been moving since the beginning of May after we had a pullback. You can see that we took a pullback here after stopping at this really high volume zone, as you can see. And guys, I want you to remember that volume, high volume, sort of like sideways action, right? When you get low volume, that's when you start to see these crazy moves up and these crazy moves down, or just moves in general, right? Because there's not many people fighting. High volume, sort of like it's fighting, right? It's action, it's a war. And low volume zone is just a move. It's just kind of boom, boom, boom. It's just there's either not many sellers or there's not many buyers. And if there's not many sellers, buyers don't have to work as hard to move the price. So that's why it's lower volume, because if it was higher volume, then there would be a lot of buyers and also a lot of sellers combating at the same time, which equates to the higher volume. So how do we turn that into using support and resistance and supply and demand? How do we make that a tradable strategy? Well, let's talk about it. So first thing you can do is you can put on a volume profile. All right, Webull has a great volume profile. I like to use Webull because it's adjustable. As you scroll, as you zoom, you can see the volume profile. It changes as I put whatever I have on my screen in reference, right? So if I just want to trade the Tesla pullback, or if I just want to trade from the top here, right, you can actually go here in one of these and do a fixed range volume profile. You can go from the top, almost like a Fibonacci, and draw the bottom, and it'll show you. All right, let me turn off my volume profile so we can see. It'll show us the volume at prices, right? So you can almost use this like a Fibonacci. In fact, this is how I use quote unquote Fibonacci, right? I like to use it in the sense of volume profile. So in the case that the move has already been finished, or the downtrend has already finished, we've for sure broken the downtrend, that's a different story. And some people would say that the downtrend's broken, but check this out. If you put the trend line at the absolute tops, it's not broken yet, right? But if you do it where it's most likely at the majority of the closes, then we're getting pretty close here. In fact, it probably hasn't broken yet, in my opinion. But let's just say that that it's broken, and we want to use the Tesla move like this down, and we can have we can use this fixed range volume profile as a measurement if we move back up, or we want to, basically we're using as retracement, just like Fibonacci retracement, right? You can see this red line here. This red line here is going to be the highest volume price, right? It's going to be the price that tells you exactly what the highs. And if I hover over, see I'm hovering over it, it tells us the exact price from where we specified the range that we put. The exact price is $297.24. And actually, we don't even have to go with that to the T stuff. We could just put 300. We could go ahead and put 300 as a level here. You can see how I'm doing this. So 300 is definitely a place where we're going to see some sideways action. Okay, 100%. And we can also go to another one. You see this one's like 230, etc. This next range here, but we'll just say like 250. That's about the top. It's going to be about the top of that move. So or top of the ranges, right? So we can say that Tesla almost has barriers every $50, right? We can kind of see that. So once you get to, and you see how psychological levels work, it's much easier to define buying and selling when you're using psychological levels as support and resistance. It's much easier to define buying and selling. So let's go back. Let's get rid of this fixed range volume profile, and let's look at it in terms of supply and demand now. So what we'll actually do here is we'll take the rectangles. And I want you to think of supply and demand as the low volume zones. Remember how we were saying low volumes move quickly, right? It's almost like a definite rejection. It doesn't hang out there, right? That's how you call tops and bottoms, is you sell at supply, or you buy at demand, or you buy it support, you sell at resistance. That's how you get tops and bottoms, and that's how you catch breakouts. So we're going to go ahead and call this here a quote-unquote zone, okay? As well as, we'll do this one here. Okay, and you can just see I'm doing the tops of the ranges, places where price comes in and just rejects. It's rejecting, right? There's either not enough sellers there, which leaves buyers to just go crazy here, or there's not enough buyers, which leaves sellers to just hammer it, and it falls quickly. We'll do one here. That's kind of one. That's a very skinny one here. Oop. That's a pretty skinny one, but we'll call that one that. That's pretty skinny there. We'll do another here. Okay. You can kind of see how this goes. And we can actually match this up with the volume profile and make sure that it's correct. Right? A lot of these zones here should be low volume zones. They have to be. All right? It's where volume is not, there's no fighting. Right? We want to see a rejection immediately. Do we want to see? We want to see these, and that's what's important when you're trading. You want to have these barriers, because these barriers are going to have you hold your trades, or it's going to keep you protected. I want to see the stock holding this zone here, and in fact, I want to see it have increasing volume out of this zone, like how it's doing now. That's going to tell me that buyers are absolutely expecting the price to go higher, because if you think about it, buyers are buying more as the prices are going higher. That tells me that the market thinks it's going to continue, because why would buyers buy more as the prices are going to go higher? It's a fear. It's a FOMO, right? They're FOMOing into the stock, and it's correct. They make the stock go higher because it's either ran out of sellers or et cetera, et cetera. So it just moves that way. So, and I want to put my stop loss. This was important. You put your stop loss below the zone. Okay. In the way I like to do this, if I see a candle close below the zone, or even safe way to do is if I see a candle open and close below the zone, right? Much better. That's even better, right? That's a for sure break. It's for sure broken. The zone's for sure broken. So that's how you can use these zones as protection, right? It's much easier that way. So mixing that in with the volume profile, you can see how we can start to get supply and demand zones. And you always want to make sure that your supply and demand is in low volume zones, because those low volume zones are where you can have protection. For sure protection, because we should have ran out of sellers at this point. There shouldn't be sellers. We shouldn't need many buyers to move right now, because we're out of sellers. We shouldn't need many buyers, right? We shouldn't need many sellers at this zone because we're out of buyers. So it should be protected. I'm going to place my stop loss here. I'm for sure protected, okay? And if we break through here, wow, there's more sellers at the top here, or wow, we were coming up to get more sellers or more liquidity, that we weren't out of buyers here. You know, so that's what we want to see when we're using volume profiles. So how do we apply this to Tesla? The whole thing was Tesla analysis. I was just using this as a small study real quick to explain how you can use volume profile like this, which you don't need to, right? Obviously, if a stock is moving sideways for a big range, or there's a lot of movement here, or a lot of action here, or et cetera, there's going to be high volume there. You know, if there's we'll go to Tesla, but you get what I'm saying, right? How you can use these low volume zones as protection, and these high volume zones are going to be where you want to either be accumulating for a move up, or you want to be honestly, I don't know what else you'd do for high volume zones other than accumulating more and grabbing more shares if you were to be trying to get the next move up. But anyways, let's go and see how we're going to apply this to Tesla now. Okay, so I'm going to go ahead and delete all that stuff. We'll take off the volume profile. Okay, so immediately we know that we are coming up pretty strong. Okay, so pretty strong. I mean, we initially started with no sellers, right? It was very easy to move the stock because it was taking less volume because there's initially no sellers. Okay, so we'll say that's demand. 100% we have demand here. It did not take much volume to do that. And we'll just keep that one green, right? Now, we can use that. So because there's demand there, we should know that if we retest this demand, right? If we retest this demand after breaking out of it, or it should almost be allergic to it, right? It should try it, maybe get close, which we see here. You see it's kind of trying it. See it's kind of getting close here, but it just can't. You see it just can't go lower. There's not enough sellers there still. Okay, still not enough sellers. And that would make me very, very keen to move my stop loss up. After I put the stop loss below the demand, I see we're coming up. We hit a quote-unquote supply zone, but there's not supply. There's no sellers here still. I'm going to go ahead and move my stop loss. I can move it up, and I can put it below the close of the break, right? Because if we have a supply here, I could put my stop loss above the break of the, or sorry, below the break of the supply. So I could put it about there. So say if we come back down and we close below the supply here, which should turn into demand, right? This supply should turn into demand after we break, which it does. You see it's allergic here. Then I'm out of the stock. That's basically how you do basic risk management 101 with supply and demand. Okay. Anyways, so we have our demand zone coming up. There's not enough supply there. We're coming back up. Now, let's find our supply. Okay. We have a few. We've got one here. No supply. Look at that. There's no supply there. Okay. Next one. So this one, we'll just make it yellow. Next one, we're looking for something that really doesn't have, there's really no volume here. That's how you find a really good area. How little volume does it have? Let's confirm it with the volume profile. Look at that. Nice low volume zone here. Perfect for an entry for a short. Perfect for a pivot. Perfect for a reversal, etc. Perfect for that. Right? So, guys, don't overcomplicate it. Okay? Don't go thinking, oh, there's gaps there. It's got to fill the gaps. We're gonna blow through this, etc. Guys, it's said before. Okay? There's no volume there. Okay? For whatever reason, that zone just does not have volume. It's allergic to that zone. And we've already broken through that. So now we're coming back up and retesting it from the bottom. And there's still no volume there. It can form volume there. It's not like it'll never form volume there ever again. But I don't like to trade off of hope. I want to trade off of history. And that's why so many people buy the index funds, because they can double their money every 7 years. Right? Same thing with this. So this is a very strong, low volume zone here. And we're coming up to it from the bottom after not having supply. There was not sellers, guys. Okay? There was no sellers as we're moving up into this. Okay? Why would there be no sellers? Ask yourself that. Are they waiting? What are they waiting for? Right. They're waiting for a specific thing. Maybe the FOMC meeting is coming. It's literally coming next week. Right. Maybe the CPI coming. It's coming next week. Right. All these things. Why would they be waiting? Why are the sellers waiting? Because we're not seeing that. We're not seeing many sellers. So what are they waiting for? Etc. Now's the time. Let me scream in your face now, okay? Now is the time. If you're waiting for the short, now is the time. If you're waiting to sell your position, now is the time. Not financial advice. Let me make this clear. This is not financial advice. This is mainly for education. This is solely for the purpose of education. Okay. And I'm not endorsing Tesla. I do not have any share. I do not own any stock. Right. This is mainly for education. We came into the low volume zone. Okay. From the bottom up. There should not be any volume here. So we should be out of buyers, guys. Let's keep it real. We should be out of buyers. There should be only sellers here. Okay. And we should see that because of how many buyers it took. Look how many buyers it took. It took a lot of buyers to get this far up. Okay. After having moves like this, I mean, look, let's make in reference to this candle. This candle's this tall. Making reference to this candle. This going over here. Well, and that's not a good reference. So this one is lower, but it took more to do about the same. Right? Let's look at this. It took more to do about the same. Right? Look at this trend. Well, you know what? I'm looking at it. Well, I don't know. We're gonna say because I can't really find a pattern with what I'm saying, so we'll just ditch that. Okay, we'll ditch that. It just doesn't look like it's gonna continue, guys. Okay, that's just what I'm gonna say. It's pretty obvious to me. Everything I've been saying, we're in a low volume zone. Okay. We haven't had sellers come in. Sellers are waiting. We got CPI next week. We got FOMC next week. What could go wrong? Right? What could go wrong? Well, the answer is everything. So, whether or not we hit supply, come back down, and retest this volume zone, that's a different story. Because we're starting to see volume here. I would imagine we do that. I would imagine that. Because we would need to come down and get some more fuel here at around 200, around this area here, to get some more fuel. Because volume is fuel, right? Volume is fuel for an equity. And equities can either use the fuel efficiently or inefficiently. All right, so this is an example of an equity using the fuel almost inefficiently. I want to say it's kind of average, but it's taking more to do about the same. Not really, because I would really have to look to see it, and if I really have to look to see it, I'm not even gonna call it a pattern, right? But in my eyes, this is slightly inefficient. So I would say there's hidden sellers here for sure. Hidden sellers, especially around this area. Okay, so Tesla, I'm sorry, I'm bearish on you right now. Okay, if anything, I'd love to see a retest and then a dump, but because I'm not in this beast, I'm not in this beauty right now. But that's all I can say, guys. I hope you enjoyed this. I'm sorry for my crappy pattern recognition over here. I'm sorry for that, but I hope you enjoyed this. This was a nice little lesson on Tesla and volume profile and the difference between low volume zones and high volume zones, and how you can use low volume zones as protection, how you can use that to your advantage, right? Because that's ultimately what we want as traders. You want to enter into a trade with protection and be able to see it through and move our stop losses up. Keep moving our stop losses as we find more protection. We want to keep moving them and essentially be trailing our stop loss like that. right? Because we don't want to enter in a trade and have it go all the way up, and our stop loss is still at this protection down here. We don't want to do that, right? We want to find protection as it moves up higher, and right now the protection would be about here, right? This would kind of be where my next protection would be, around here. So I would have my stop loss somewhere around this area, even if there might even be one, over here. Not really, right? So I'd probably take it here. But that's it. Happy Tesla-ing. Yeah, volume profile is great. Volume is great in general. Supply and demand is great in general. Guys, support and resistance is great in general. Mixing all that together, beauty. Now we're making some money. All right, have a good day. I hope you enjoyed this video.